Well, welcome back. Let's have a look at international markets news. Now, Asian stocks were pounded today after US President Donald Trump suggested that China, quote, broke the deal in the trade negotiations between the two economic powers. Tomorrow is the scheduled date when the US could trigger higher tariffs. It would see some $200 billion worth of Chinese goods being hit with a 25% import tariff hike compared to the current figure of 10%. Key markets that are integrated into the Chinese markets like South Korea got hit hard, falling by over 3% at the close. In Japan, the benchmark Nikkei share average dropped by 0.9%. Hong Kong stocks led markedly, the Hang Seng Index trading down 2.4%. Mainland China also hit, but by a smaller margin. The Shanghai Composite Index declined by 1.5%. The S&P 500 fell on Wednesday as a late slide in shares of the Intel Corporation erased earlier gains, fueled by hopeful notes from the White House regarding the status of those trade talks with China. The Dow Jones Industrial Average rose 0.01%, the S&P 500 lost 0.16%, and the Nasdaq Composite dropped 0.26%. Let's now go to Arabile Gumede, who's standing by at the JSE in Sandton.
Yeah, good afternoon there, Stephen. Of course, the market, as you just pointed out, it's red across the spectrum, across the board there. Wherever you go, things are looking quite dire. And it's not necessarily just because of global growth concerns, but actually just Donald Trump having put out those China-US trade tantrum, if you want to call it. The temper tantrum from Trump is in effect again. As you said, Friday is that date, of course. $200 billion worth of Chinese goods will have a tariff addition from 10% to 25% is how much the US will then add on to the tariff situation there. So it is dire, it is causing the markets to perhaps feel it. Even here locally, we are feeling it. Of course, we had a holiday yesterday, so perhaps it's playing catch up, if you will, in some respects. Let's get a hold of exactly how the numbers are faring, and we'll analyze those in just a bit. You would have noticed that the only thing in green territory there were the gold shares or the gold counters, and that's primarily because as investors fear the scenario across the globe with regards to their China-US trade talk, they're then shifting to what is safe haven investments, and a lot of that will either be government bonds or gold, which is traditionally seen as a safe haven. Let's unpack exactly what all of this means now. Viv Govender joins us. He's from Rand Swiss as we unpack that market picture. We're just playing catch up though, Viv, aren't we? Down 1.3%, largely expected, I suppose.
Yes, what happened was on Tuesday, the fall started really happening in the US markets after we, like you said, we have some more news about more sanctions going through against, the Chinese, etc. And that's obviously made a huge impact on global markets. But yesterday we were closed, unable to absorb that. And therefore, today we're getting the full impact of basically 2 days of negativity in the global markets.
Yeah. What does this mean, however, then for the US market in particular? Some would say that Donald Trump is just playing a hand here to try and, coax China into making a deal very quickly. He's become tired of this whole scenario and just wants to reach an upper hand. But at the same time, it does put China, on like the defensive here, and saying that they certainly have to make a move very quickly or things get rough for them.
There's even a more cynical way to look at this. It was a few days ago, the New York Times released a tax results for Donald Trump over late 80s and 90s, which showed that he was probably the biggest businessman in terms of losses over that period of time in the entire US.
Sure.
He lost like $1 billion. And there's obviously kind of the one thing Donald Trump doesn't want people to know about is they can talk about these infidelities, they can talk about all the sneaky deals he's done. He doesn't want them to know if he's like basically a poorer guy or he's lost money. And that's one of the reasons maybe he's basically hiding his tax receipts, not to show fraud or whatever, but to maybe show not to show people just how poor he might be.
Yeah.
You know, he's not a poor person in normal terms.
But in comparison, thought,
he may be less rich than people anticipate just because of the amount of losses. He's not been a good businessman. He's inherited a lot of money. He's lost a lot of money as well, and so he may not be quite as wealthy as been talking about. And this might be a way to basically fight. It's not just China today; it's also Iran as well.
Yeah.
There's more sanctions against Iran, against the steel sector in Iran. So these are the kind of things that really play well with his base, the more right-wing base, and that might be a way to basically distract from what he thinks to be his true weakness, which is basically how much money he has.
Yeah, and that scenario just keeps on getting worse, right? So the Democrats just keep on either putting out subpoenas or fighting it and going through the courts on that one. That market, though, has been in a consistent bull run, and we've always noted that it's been in a 10-year bull run, plus minus. Is he, however, showing the fragility of that market, or is this just a case of it's just a one-time thing, and if they sort out these trade issues, for example, things sort of get back to normal? There's
a famous phrase in trading. It says, if the Fed is doing something that's not working, then basically it's time to basically follow the Fed, because the Fed always rules. If the Fed is having interest rates at lows and not raising them as you anticipate, the market's going to do well. It's just a kind of thing that follows, you know what I mean?
Yeah.
So as long as central banks are being very, very loose, we expected markets to be very strong. And there was a fall, the liquidity would force the market prices to go up.
Yeah.
One thing to note, however, at the moment is that a lot of the things that's coming through has been basically share buybacks. Share buybacks have been a huge portion of all the support in the market. Share buybacks now dwarf, dividends, for instance, as the way
that comes from the tax reform thing that Donald Trump had put in place, right? Some would have thought that would have brought back jobs, but instead it just meant that executives are going to get a big fat payday, so to speak.
I mean, interest rates are this low. I mean, there's opportunity out there. You don't really need to have money to basically make money. If there's a good business case, you'll go to the bank and say, I need to borrow money. The interest rates are low. You borrow at a low interest rate, and if there's an opportunity, you'll make money. There's no need to have that money in your hand. There's maybe an argument to be made that, no, the money goes back to consumers and they can buy more. That might be one way.
Yeah.
But in terms of businesses being short of cash and need to basically get more cash to make more jobs, not really true when we have such low interest rates.
Okay. That oil price as well, then still involving the United States in many ways. They issue out sanctions on the likes of Iran and even Venezuela as well. But then OPEC also saying, initially they were going to increase supply, but they're going to hold back now on that. Russia as well in the same scenario and in that situation. So the oil price then headed firmly towards that $70 a barrel mark. Good for us, but the oil exporting nations won't like it too much.
Yeah, one thing that has come out is that the Saudis have come out and say they will supply anyone that's been buying from Iran would the sanctions come through. The Saudis and the Iranians have a hatred that's beyond what any other country in the world I think has. It's like a millennia old basically, and they hate each other for religious reasons. Even we talk about like Al-Qaeda says like Iran is their number one enemy, not like the United States, that kind of stuff. So if they can hurt the Iranians and basically take away their customers, it's obviously a positive. So that's one good thing. Next thing, the coup in Venezuela. There was a mini coup in Venezuela that failed. The US has such a toxic name in Venezuela. When they supported the coup, it actually hurt the coup. But the thing that I think we also need to concern ourselves about, which hasn't been resolved, that might actually cause a bit of an upward jump again, is Libya. The stuff happening in Libya at the moment that is terrible. It's basically a civil war happening between what is now a US-supported rebel faction against the officially supported government at the moment. And of course, people are dying. But again, if there's disruption there, it could have a huge impact on the market in the short term again.
Sure, certainly going to be an interesting one. We'll continue to check in on that. Very quickly, Viv, before we close off, that rand as well, 14.35 odd against the US dollar. At some stage 14.40. So maybe strengthening somewhat. But is it really rand strength? Is it dollar weakness? What is the scenario?
Okay, look, we are getting some impact from, the weakness that happened, that jump up from about, say, 13.90 to about 14.60 was primarily because of the rand. Because we had ESCOM, we had another issues around South Africa. I think we're still in the midst of a rebound from that. So if there's kind of calm, we will kind of probably drift towards 14 again. And so that's the kind of driver here. There is dollar impact is coming through. But the movement that we had 2 weeks ago or so, we moved from about 13 some change to about 14.60. That movement has to be adjusted for again. So the majority of the momentum in the market, I think, is primarily rand driven at the moment.
Elections playing a part somewhat?
Possibly. I mean, I've heard rumors, like talk out there that a 60% ANC win would be good for the government, for the markets, and good for the rand.
It's about certainty, right?
It's about certainty, but I mean, let's just see what happens. Let's see what the results come out. I mean, now it's a bit too early. Let the big metros report. Let's see what it looks like tomorrow, and probably we should have an idea by like tomorrow afternoon what the results. Even the Saturday is the result day. If we can see some certainty, like a reasonably strong ANC majority, no huge uptick in terms of some of the left-wing parties, that might be very positive for the rand. But let us see what the actual results look like.
We're certainly in and around 40% of votes having been counted thus far, and we'll continue to get, of course, updates with regards to that and how exactly the situation with South Africa's elections are faring. Yes, the ANC is looking to be in front at present, and some gains here being made across the board, even the likes of the Freedom Front Plus stepping ahead as well on that one. But the markets, however, all in the red, unfortunately, and things aren't necessarily looking as green as some would certainly have liked. But for now, that's where the buck stops here at the Johannesburg Stock Exchange. Of course, interest in that market picture as we head off from this right through into elections. Our election coverage continues here on SABC. Do stay tuned. We're going for a short break.